Hello everybody, John Devine here. I got a great trading video for you today. We're looking at the Bitcoin futures markets. This is the CME markets I have up in front of you. And if we look, we have Bitcoin November 20, Dece 20, Jan 21, Feb 21, March 21, April 21. And we're talking Bitcoin futures markets as we're in the middle of a Bitcoin rally. And I think it's very important to take note that as institutional capital flows into the Bitcoin market, the futures and options as well become extremely important venues for managing risk at the institutional level. So taking note of the futures market is going to become increasingly important for Bitcoin trading. And just to kind of confirm that, well, here we have the Bitcoin price chart. As we can see, we're pushing up on all-time highs as we speak. We've already surpassed all-time highs in terms of market cap. But back to futures. This is a chart from skew.com. This was posted on November 19th, 2020, today. And we can see that there's a new all-time high in aggregated daily volumes across all the major Bitcoin futures venues. So this is super interesting stuff. Not surprising to see as more institutional capital comes in. This is how they manage risk. This is how they like to trade. So continue to see aggressive Bitcoin volumes on the futures contracts as we move forward. Now, to narrow it down, this is CME, and this was posted yesterday, same skew.com data here. The CME made a new high in aggregated open interest on their futures contracts, and this goes back to Paul Tudor Jones saying back in May that he was actively trading the CME Bitcoin futures markets. Renaissance Capital, James Simmons over there, he's setting up his firm, or they're already set up to trade the CME futures markets. Continue to see these traditional financial players move into Bitcoin via the CME and other regulated venues. To go down the list here, I'm going to start with Deribit. Deribit's a very popular trading venue for Bitcoin derivatives. So look here, we have the perpetual contract, which is a very common derivative in Bitcoin markets, but we also have a bit of a curve here. We have the Dece 20 market, we have the March 21 market, the June 21 market. So we can see a curve starting to develop there. Would expect that to grow. Now Bit.com, we have the perpetual, the Dece market, the March market. OKX, same story. We got the perpetual, we got Dece, we got March. Binance is getting in the mix. We got perpetuals for Bitcoin. There's also going to be, Bitcoin perpetual. We got the Dece, the March. Expect that to continue to grow. FTX, same stuff here. Perpetual, Dece, and March. Those are just orders filling. And here was Kraken again, perpetual, November, December, would expect this to grow out. Alpha 5 is super interesting. They allow you to trade the entire futures curve. That's powered by implied orders. I definitely talk about implied order structure throughout my education series. And then last but not least is the CME. This is the curve for CME. This is Nov, Dece, Jan, Feb, March, April, May, December 21. So a full curve at the CME. Back to the screen we were looking at the beginning. This is the CME futures markets, and I am providing liquidity, as you can see, on the offer and on the bid all the way down the curve. I'm currently in simulation. Anything I discuss here is for educational purposes only, but I want to demonstrate here how statistical arbitrage trading strategies can be deployed to provide liquidity to these futures markets. As institutional players step up, they need liquidity. So here we have offers all the way up the book, bids down the book, offers, bids, that's Dece, offers and bids in Jan, same story Feb, same story March, same story April. And as you can see, the market moves and my orders are moving. They're programmed orders. They're working a specific strategy. It is statistical arbitrage. And with that, I will lead to my site. So I wrote a book on Introduction to Futures Markets. This is really a fantastic resource for anyone just getting into futures trading. Maybe you're a spot trader, maybe you're an options trader. You want to learn about how to trade the futures markets. Great place to start here. And then the Building Statistical Arbitrage Trading Strategies, I do have a book for that as well, but I would guide people towards Course 201. And the reason is I have about 4 hours of video that supplements the book. And what the video does is it really just takes you through a simulator and how I build these strategies that can be deployed into live markets or in simulators for testing. And it just breaks down every step to building out a statistical arbitrage trading strategy like this. So to conclude, I just want to take a quick peek at this is the Introduction to Futures Market book. I want to take a quick peek at the forward curve just so everyone understands what we're talking about here if you are not too familiar. And let's see it. Let's find this curve. Here we are. So this is the example curve I used in the book. This is the CME curve. It can be applicable to any futures market venue that offers a full suite of listed contracts. Another super interesting thing to be aware of in Bitcoin trading is the basis trade. This is an interesting trade relative to other traditional asset markets. I go into detail on why that is in the book. And going even further, I also do teach about calendar spreads and how to make a market in calendar spreads and statistical arbitrage around the relationships between listed contracts. So there's a full calendar spread curve. It's good to be educated on what that means. And back to this strategy, the math is really going to be pretty constant across all trading venues. So I'm using the CME as an example. I think it's got the largest curve to trade. There's institutional participation, but this math and the strategies can be applied across all the futures venues that we've talked about here today. So I hope this was very interesting and very helpful for everyone, and thank you for your attention and for your time.